I want to talk about this week, what we've got coming up and what we can expect. And I want to talk, if we look back at March, right? Just the month of March, the 2-year yield rose by 86 basis points. That's huge. The 10-year yield rose by 49 basis points. The 30-year yield rose by 27 basis points. That's how we got to that inversion that we've seen, right? Where 2-year yields are paying you more in interest than 10-year yields are. And you saw a significant jump. Just to kind of put those numbers in perspective, in March 2021, the 2-year yield rose by 4 basis points. So a year ago, the 2-year yield rose by 4 basis points. And last month, the 2-year yield rose by 86 basis points. That is significant. That's a huge sell-off in the Treasury market, particularly at the short end, those shorter dated bonds. And that, I think, that's obviously why we're seeing this inversion, but it was something that had caused tech stocks to sell off and folks to get really worried about some of those companies that weren't generating a lot of profit. Now it seems like those worries are gone. So we'll see if that continues, because the bond yields really shot up even through March, after that March 14th date, which I mentioned earlier on in the live stream was the death cross date and was when you saw a lot of those tech stocks bottom. Yields kept rising, but it seemed like everyone was okay. The stock market said, oh, that's fine. The NASDAQ continued to jump, and we're gonna see if we get back to all-time highs now. The Dow is just 5.4% away from its record, probably a little closer to that after we've risen in value today. The NASDAQ is about 11% from its all-time high, and the S&P is 5.2% from its all-time high, again, coming into today. So we'll be a little closer to those all-time highs if we end in the green, and we'll see where we go. I think the biggest event coming up, last week we had a huge data overload, right? This week, not a ton of data. The one release I think you really need to make sure you watch out for, and it's not something I think market investors are typically used to digging through, but the release of the FOMC minutes on Wednesday. We are going to get the minutes from the Fed's March meeting, and we're going to see what they really talked about, what was said, what consensus was drawn, or maybe there wasn't consensus. Here's why I think that's most important. Powell usually comes out in the post-meeting press conference and talks about, well, here's what we said, here's what we determined, and kind of really lays it out there for the market. He said that the committee had an extensive discussion on when it was going to begin winding down the balance sheet, but he didn't get into it anymore. So what we'll get with those minutes is what the committee really said about winding down the balance sheet. Are we going to get that in May? Are we going to get that in June? When they start to reduce the Fed's balance sheet, it's right now at about going on $9 trillion. It's about doubled since where it was the beginning of 2020. We've about doubled the balance sheet, and it's over $8 trillion now. When they start to wind that down, that means they're sucking money out of the economy. Rather than continuing to buy bonds and add to its balance sheet, the Fed stopped buying earlier this year, and now they're going to start letting some of those bonds that they've bought mature, and they're not going to buy new ones. That provides a lot of support for the economy, and the Fed's saying that they're going to kind of start to pull that back. So in addition to raising rates, which they've already said they're going to do, the market now pricing in 50 basis point hikes in May and in June. So double the size the Fed normally does. We could also find out that the Fed is planning to start balance sheet reduction in May or June. So we've got double the size of a rate hike that we normally get, and we could start to see balance sheet reduction. Is the market prepared for that? Because the Fed has been incredibly accommodative, keeping rates really low. Now they're starting to pull that back, and in addition to potentially a 50 basis point rate hike, which the market is pricing in, which investors seeing, Goldman Sachs, Deutsche Bank, they've all come out and said, yeah, we expect 50 basis point hikes at the next 2 meetings, potentially as many as the next 4 meetings. And we could see balance sheet runoff, which is basically the Fed has said that would act as kind of another basis point or another 25 basis point hike. So we could start to see some very significant tightening of rates from the Federal Reserve starting as soon as May. And those minutes that we're going to get on February are really going to tell us what to expect and whether that's really in the cards. The other big release I think you should be watching for next week is going to be the Fed's G19 report on consumer credit. This is a real nerds report, and I know a lot of people don't really get into this, but it'll be great to check the temperature on consumer credit right before the Fed really starts to actually raise rates. We've only had one rate hike so far this year. Once we get into May and June, credit card rates are really going to start to shoot up, and we'll see what consumers react to that. So it'll be great to have a baseline for, did consumers continue? Because we've seen a lot more putting things on credit cards, a lot more revolving credit, which is those credit cards and things like that. So check out the Fed's G19 report. That's coming on Tuesday. Also, we've got Fed Speak this week. Fed Governor Lael Brainerd is going to be speaking, as well as New York Fed President John Williams. Behind Powell, I think those are the two most significant Fed speakers. Lael Brainerd, she is expected to be number 2, the vice chair, if she's confirmed by the Senate. So unofficially, but soon to be, expected to be soon, officially the number 2. And then the president of the New York Fed is always a significant member of the rate setting committee. So always someone to watch. New York Fed President John Williams is going to be speaking. So we are now in a new month and a new quarter, and we're going to find out if these trends continue. So far, we saw stocks rise a little bit on Friday. We are seeing a pretty significant pickup in stocks right now. In particular, the NASDAQ is up significantly right now, checking in on where it is. The NASDAQ up 1.76%. So it seems like as the day continues, stocks rising further. And that, we'll see. Does that continue? Do we keep on the pattern that we were on from March 14th, where stocks went up and tech stocks have outperformed? Or do we continue on the path that we were on before that, and stocks go down and stocks have a rough time and oil prices do really well? Again, this is our live stream. We are coming to the end of it right now, so I want to thank you guys for being with